Alright, you guys, so I want to show you what I mean when I posted the two videos that said the energy sector, which is XLE, ticker XLE, put that in trading view, is the new Bitcoin. And so I want you to look over here. These are all your industries, okay? Technology, utilities, healthcare, it's all here. Communication services. So these are my industry industrials. This is how I read the market throughout the day. Okay. And so what I want you to observe, and why I'm saying what I'm saying, just like I was talking about and sold Bitcoin at 62,000, got completely out of all of the long positions. I want you to observe this as I'm calling out and saying energy is the new Bitcoin. So look at this list here. This is the market on close today. Okay. Everything's red except for XLE, the energy sector. You feel me? For people that listen. Now check this out. This is UNG. This is the trade I'm actively in. On the 1 hour, I want you to see how even with the SPY coming down today, the natural gas fund is staying up. Okay, so it's going to be a lot more resilient to a downturn. Doesn't mean that it is impervious to a downturn. If the jobs data comes out tomorrow and you have bad jobs data, it's good for the market. So people losing their jobs is good for the market. That's what the market wants to see. If you see people, the jobs numbers are weak, the market's going to rally. This will rally. If the job numbers are strong, market's not going to like that. This will sell off, but it's not at the same level of risk as, say, like Tesla. Okay, so Tesla had Elon's deal this week with Twitter. Bang. Right? Tesla has all this exposure to technology, all kinds of things. It's not as volatile. It's got a lot more cushion. So that's the basic update and what I'm moving towards and why I know what I know. It just is the way it is, and there's the evidence right there. So anyway, you'll see what's up with the jobs data in the morning, and then Tuesday you have the CPI. As far as the CPI goes, like I had pointed out, basically you have oil prices rising based on what OPEC did, but that's not going to affect tomorrow's or Tuesday's CPI. But what will affect it is that on the last CPI, gas prices were coming down, okay, and now on this CPI, gas prices were heading up. So inflation had stayed neutral. It was up a little bit. The CPI was up a little bit last time, just by a 0.1%, but that was not good for the markets. And at the same time, gas had come down. So what do you think is going to happen if gas goes up? And kind of common sense, you never know how they're going to manipulate the numbers, but I don't think anybody really sees prices coming down at the grocery store. Or average ordinary people aren't seeing a sudden dip in inflation. And with gas prices rising, it's likely the CPI is going to come in a little high, and then we'll deal with that at that time. So it's something to pay attention to for Monday, Tuesday. And then as far as Bitcoin goes, it's really straightforward. Basically, you can see you're in the gold box, and so tomorrow if you get a pump out of the market, you might tap out here. If you have good bad news, in other words, the market is going to get volatile, so you might see a pop up here if the jobs data comes out and the workforce is strong, then you're going to want to short this gold box, right? That this might be the top. Now, if you get a good rally, let's say the jobs data is jobs are weakening, then you might get a breakout to this next level. That's all it's about, man. And everybody's got these ideas that, with their indicators and everything, but that's all that matters. If jobs data is good, then market's going to break lower. If jobs data is bad, market's going higher, right? That's it. And Bitcoin is going to top out at, you could short this pivot, but this gold box is pretty much it for Bitcoin. And we'll see how it goes tomorrow. All right, you guys, peace.